Hey Alpha fam, welcome back to another episode of Alpha Commission where lifelong learners meet in our Discord in order to share Alpha. Today I wanted to talk to you about Grayscale and crypto. I did a episode about a week ago regarding the Grayscale Bitcoin Trust chart and how it differs from the Bitcoin chart. Well, as you may be familiar with the Bitcoin chart, we had this higher high and also a higher low now, even after this crash, right? And so things look pretty bullish on the chart. We're even taking out these previous areas with this pump. And if you were just looking at the Bitcoin chart from the spot exchanges, the 24-hour exchanges, just the regular crypto, you would think this is actually looking very bullish. But why did we have this crash in the first place? Was there any indication that the market was a little bit skittish on Bitcoin? Well, one of the things that we discovered is that you can take a look at this Grayscale Bitcoin Trust chart, right? Now, if you don't know what the Grayscale Bitcoin Trust chart is, the trust itself is, they have Bitcoin that they sell, and right now it's selling at a discount compared to the rest of the market. Now, previously, in the early days of the trust, it was in such high demand that it was selling for a premium. These days, it's selling for a discount. So you would think that this would be an even better deal than buying Bitcoin on the exchanges, on the other exchanges. For example, you could have gotten, for 80 cents, you could have gotten $1 worth of Bitcoin by buying it on Grayscale Bitcoin Trust. Well, there was an indication that this smart money, who likes to work through these trust rather than being on these kind of sketchy 24-hour exchanges that have come out of the crypto industry, the smart money likes to work with trust and institutions, and that's what Grayscale is all about. They were giving us an indication with this lower high that they weren't as confident in this asset as perhaps the rest of us were. We also had a lower low here, right? Now, I was trying to figure out whether or not Bitcoin had broken its trend based on this chart about 4 days ago, 4 or 5 days ago. We were approximately here, and I was saying, look, Grayscale hasn't broken its trend, but Bitcoin did. It was over the weekend. And, when we broke trend, I said, well, I'm going to wait until Monday to see what the Grayscale chart does. Well, the Grayscale chart also had a great breakout. However, this isn't the full story. Look at all these holes in this chart, right? There's so many holes in the trading. Are we sure that we're looking at the full chart? I did find another chart for Grayscale, and this is being traded. I mean, this is being held over here at FTX. Well, FTX is a great exchange. They don't have the whole history of Grayscale, but they do have very smooth trading for the recent period. And what we can see is all those holes kind of disappeared, and we can start to draw our trend lines. And when we draw those trend lines, what we find is that, look, we do have that lower high and that lower low that I was speaking about, but we also have this downtrend over here and this downtrend over here, which hits certain wicks on the candles, right? That's supported by the wicks. I'm just explaining these things for perhaps newer people. Um, When we're looking for a downtrend, we want to connect a line to all these wicks that we can find. And the more candles that a chart has with the less holes in it, because some exchanges are closed on the weekend, etc., the smoother all these candles that we can find, the better that trend is going to be. Because if the exchange was closed right here, we might draw our trend line going down a little bit sharper. Well, this exchange was open 24 hours, and so we can see a continuous time scale. And what we see is that even after that pump, still Grayscale has not broken trend. And in fact, it was rejected once, twice, 3 times. And if you zoom in on this one, it was actually rejected 3 times here. So 6 times, at least 6 times, Bitcoin has been rejected by this downtrend on the Grayscale chart. Now, this is the smart money. And I don't want to make this video too long. I just wanted to do a follow-up to the previous episode that I discussed Grayscale and was telling you I was going to wait to see what's going on with the Grayscale chart before I made any, long-term decisions. For example, for hodling positions, right? If I was going to hold a position for a longer period of time. And what I'm seeing here is that I should still have my trader hat on, okay? Well, when we broke trend here, it was clear that we broke out of the downtrend and we just started taking off again. I could have hodled some type of crypto, like maybe Bitcoin or something else that you might want to hodl, and you could have rode this trend all the way up, right? You could have done that. However, if you're under this trend line, if you're buying, you probably want to be selling, buying and selling, buying and selling. You don't want to hold on to it for too long because overall, you're in a downtrend. You're gonna lose money if you hold on to it. And what I'm seeing right now is that we're still in the downtrend on this Grayscale Bitcoin Trust chart. Now, again, because this is what the smart money likes to use to trade because you can get a discount for Bitcoin and the trust is backed by certain institutional parties. It can be kept a bit safer than these other exchanges that can be easily hacked. There's a lot of smart money using these trusts, which, regular people aren't using. So the regular money was super bullish on Bitcoin, but the smart money wasn't. The smart money was saying, maybe we're going to go down, right? Maybe we're going to go down for a while. And since we're getting a rejection here, I just wanted to point out, maybe you want to watch this a little bit more closely. You may want to watch this a little bit more closely. We didn't break out of a downtrend. We didn't break out of this downtrend yet. And so I'm not confident in hodling a position. I'd rather see if we retest this line and then break out. Then I'm going to become bullish again, right? I don't know how to parse these together, okay? When we look at the regular crypto market and we look at Grayscale, they're telling us two different pictures completely. Okay, we can see here, a bunch of trends that shows us some kind of positive momentum. Even all these lines, they show us, positive, positive, positive. You look at the fibs, you look at the trend lines. We're seeing this type of a fractal play out in a bullish way. However, that's just not the case. It's just not the case with Grayscale. In case of Grayscale, most of these lines are either horizontal or going down, and there's nothing too bullish. There was this slight indication of bullishness right here, but it's more horizontal than anything else. And the key thing, the last point that I wanted to point out and just make very, very clear in your mind, we really haven't taken out this area yet. We pumped, but we didn't take out this area. That means we're not sitting on top of this as support. On Bitcoin, we did. You can see it right here, right? This is higher than this. We took out that area. And in fact, if we come down and we just sit in this area and then we use it to pounce, that would be extremely bullish. So it's weird that we haven't done that yet on Grayscale. Does that mean maybe it's going to take a few more days for this to break out? Maybe Bitcoin needs to pump and this is going to break out and boost the confidence of the smart money? Maybe the smart money needs a confidence boost. Or is it going to be the other way around, where the smart money has now reached resistance and it drives price down, and perhaps they want to meet this trend line that's been kind of drawn out in a downward posture. This was an upward posture, right? Here's the bottom, roughly flat here, okay? Yeah, this was down, but this was up. So generally, this was down, kind of middle, and then up, right? So it's an uptrend. But on this one, wow, down, down, down. Is there going to be another down? If we are rejected on this smart money chart, perhaps we're going to do something like this. Perhaps we're going to bring ourselves back down along this, perhaps this diagonal. Maybe do something like this and chop our way down until we have another breakout, right? Maybe something like that. That's what happened here. Pump up, rejected, chop our way down, pump up. Here, we can see another analogy, right? It's kind of a little H pattern, right? Same thing. And then we chopped our way down. Are we going to chop our way back down? I'm not saying that's going to happen, right? On this chart, it might end up meeting this bullish line. So maybe 36,000. I'm just going to put that concept out there. I'm not saying that that's what we're going to get. I'm saying maybe 36,000 is something that we would chop back down to if we'd had a similar behavior as we did in summer. And if we're being led by this type of smart money, right? This type of smart money graph. And on the Grayscale, they measure it in different ways because they're pricing in a different way. But for Grayscale, that would be somewhere around 18, 17 bucks, something like that. And right now we're at 32, so that's quite a ways to fall if that does happen. That would scare the living daylights out of the market. So, things that I'm looking for. Let's break out of this green trend line down, this downtrend. We need to get this Grayscale to break out finally. And Bitcoin needs to not be rejected here the way that it was here. Okay, we can do a pullback, get down here maybe, just like right here, and do a bounce off of there. But if we break under 40,000, 39,500, I'm going to be pretty worried that this is going to play out. Okay. So again, just wanted to bring that to your attention, do a little bit of a follow-up. I didn't mean to actually get into the over 10 minutes on this video, but I hope that helps some of your understanding. And there you go. There's your alpha for the day. Happy trading.